lot of people are worried about the stock market right now. Is it overvalued or undervalued? My answer is yes. It is overvalued in the sense that the Fed's monetary policy has more to do with rising share prices than does actual earnings and growth. However, it is also undervalued due to the Fed's monetary policies. As the Fed creates more and more currency, suppresses interest rates and other competing currencies like gold, owning solid businesses seems more and more appealing. What is your alternative? Holding cash? Okay, I get that and agree somewhat. We should always have some emergency and opportunity cash, but cash isn't an investment, nor is it a store of value. I think the best thing to do in this market is to find undervalued companies based on their fundamentals, ones preferably that have been around for decades and are gushing with cash flow, because they have a business that is in high demand and will continue to be in high demand. Companies that add value to yours and other lives, businesses that solve problems, will inherently continue to grow and make profits. Same goes in your own life. Whether you're an employee or a business owner, adding value to someone's life equals money. When it comes to owning shares of publicly traded companies, I feel great about owning companies like Apple and Becton Dickinson. They are both undervalued, have a sound business model, and have been around for decades. Remember, volatility doesn't equal risk, as noted many times by Rick Rule of Sprott Asset Management. Is it possible for Apple or Becton Dickinson's share price to fall? Yes, of course. But is it likely they are going to go out of business? In my opinion, no. This is extremely unlikely, which is why when it comes down to it, I would rather own shares in a sound business than some worthless paper note backed and supported by a Federal Reserve who is printing $85 billion a month to purchase bonds, and a federal government who is borrowing nearly $100 a month in order to pretend we have a functioning economy. My recommendation to members would be to tread lightly in the markets. Become a stock picker or sign up for our Forever Stock Portfolio through Smart Money membership. Just last July, we profiled Apple at $398. Today, Apple trades for $560. It's 42% higher, and in my opinion, still is undervalued. Although we currently have a new tech giant that is just as undervalued as Apple was 6 months ago, maybe even more. I want to also give you guys a silver update. Silver looks to be a nice buy here in the $19 range, in my opinion. I have personally bought silver 3 out of the last 4 days. I am getting it for about 75 cents to $1.20 over spot at silversaver.com and dbscoins.com, who I have no affiliation with. I do have an affiliation with Miles Franklin, and if you mention our company name, Future Money Trends, you will get free shipping. Their service is excellent. I have used them before. But I still encourage everyone to check out a few places to get the best prices. I strongly encourage everyone to purchase in 100-ounce increments in order to get the best price. If you can't afford that by yourself, then try teaming up with a few friends who also want to get a good deal on physical silver. I have also purchased gold, but dollar-wise, I have purchased silver 6-to-1 in dollar value. Gold trades for 64 times the price of silver, so silver is without a doubt the better buy in my opinion. When it comes to mine production, silver production is 9 times higher than gold, but the above ground available gold supply is 5 times more abundant than silver. So the fact that gold trades for 64 times the price of silver tells me that silver is way undervalued against the price of gold. For those looking for more of a short-term speculation, I defer to TF Metals Report, who wrote a few weeks ago that JP Morgan Chase has cornered the COMEX gold futures and is taking delivery for December contracts, and that this ensures a rising gold price. For the long-term holder and accumulator, both the metals are selling for below the cost of production, which is great because it gives us all a margin of safety. Though these scenarios with commodities often last for years, I also like that they are selling for below the cost of production because it is destroying the mining sector, which will only make our profits in both the metals and high-quality juniors that much more dramatic when we do see a turnaround. Exploration is at a standstill and production is being delayed for many mining companies. Just a few weeks ago at the San Francisco Metals and Minerals Show, Rick Rule told me that he is fully expecting mines to start shutting down imminently. This will cause the supply line to shrink, which is good for investors and speculators who are long the metals right now.